the Fintech index of 54 public companies is down about 73%. So clearly they've done pretty badly.
More and more fintech companies are disrupting the banking space with innovation, but year to date, NASDAQ confirms that some of the largest fintech stocks are down by about 75%. But how does this affect SoFi? Some of SoFi's biggest competitors, PayPal, Visa, Mastercard, and Square, all had similar trends over the last few years.
How are investors responding, and what can we expect for funding, M&A, and IPOs in what was once a really hot sector?
Yeah, I think longer term, we're still pretty hopeful. Listen, the IPO sector, obviously, the IPO markets have been pretty close to any growth companies for the time being, and that includes the fintech companies as well. Fintech companies tend to be high beta stocks, so when growth stocks are out of favor, the fintech stocks do pretty badly. So the market conditions for IPOs and SPACs for fintech companies currently tend to be the toughest that we've seen in the last couple of years. But those things can improve in the next couple of years as well.
You heard the club. Fintech companies tend to be high beta stocks. This means it can either perform best at an extreme level in bull markets, but it could also perform horribly in bear markets. In short, high beta stocks like fintech companies have higher risks, but on the flip side, can also be tied up with higher returns. So if you're not here for the long haul, you may want to sit this one down. In this video, we'll discuss the fintech market in general, how fintech firms like PayPal, Visa, and Square compete against SoFi in this highly volatile market, and in our opinion, what you should expect from SoFi for the next earnings call. We're not financial advisors, and this is not financial advice, so always do your own due diligence. 75% down year to date will not stop us from buying SoFi at a discount. In a few weeks, we're expecting the Q3 earnings call, but let's take a look at how SoFi's competitors are doing to get a better picture of the fintech market. Starting with PayPal, which is coming in clutch with a 9% year-over-year increase in its net revenues, amounting to about $6.8 billion and another 9% for its total payment volume. This popular payment platform did get a negative 129% in EPS compared to last year, and the stock has been beaten down by 55.5% year to date. In the next quarter, PayPal expects a 10% gain in net revenue amounting to $6.8 billion, while GAAP earnings per diluted share are expected to range from 61 cents to 92 cents. But let's take a look at Visa, Mastercard, and Square, which come up with the same forte in payment processing. Visa, the world's largest global electronic payment solution provider, according to Forbes, is down by about 15% year to date. Compared to PayPal, Visa is up 19% year over year in net revenues and a 12% growth in total payment volume. Based on sources, Visa is expected to achieve $1.94 of adjusted earnings per share in the next earnings call. SoFi works along the line of payment processing and most likely competes with firms like PayPal and Visa, but as we all know, there's more. SoFi also specializes in financial services, but let's talk about Block, which actively competes in the space where SoFi belongs. As you can see, Block's gross profit increased in the past quarters, but total net revenue in Q2 alone was down by about 6% compared to last year. It seems that Block Inc. has been having a hard time bouncing back. Even its net loss is piling up, and adjusted EBITDA is declining. Analysts expect a revenue estimate running from 4.17 to $4.82 billion. According to the NASDAQ, the Fintech index of 54 public companies is down by about 73%. Anything consumer focused, exposed to the highly volatile market, and the recent hype on buy now, pay later has been caught in the ongoing war with inflation. During the past few years, Fintechs have been on the rise. As expected, more legacy banks are starting to copy as the Fintech index grew by about 50% in the last 5 years. That's more than the S&P and NASDAQ's range with about 25 to 40% growth. Even the experts are telling us that fintech companies are only victims of the final boss, and that's none other than inflation. SoFi, on the other hand, is down 68% year to date, but the fundamentals remain solid. While the bear market is taking SoFi down with it, its fundamentals will always speak volumes of what it's really worth. Just for the remaining half of 2022, SoFi is expecting to have around 49 to 50% growth in adjusted net revenue and 9 to 10% gain in adjusted EBITDA. With positive growth in all key metrics, whether it's net revenue, adjusted EBITDA, and even the number of members, SoFi is still pushing forward regardless of this bearish market.
But longer term, we are very hopeful for the fintech sector, and I think we're going to once the market turns around and becomes more favorable to all growth stocks, the fintech universe is, I think, going to do much better as well.
A special shout out to everyone in our Patreon community. You guys truly help to make these videos possible, and we really appreciate all the support. Shout out to Arthur Magazu, Daniel Corbett, Mr. Welfare, Casey Patel, Gregory Villar, Denzil, Reginald Davis, Les Broadway, Christian Cardelphi, Kevin Beaufran, and Jay Bone. We really appreciate all the support. Thanks for watching. Until next time. Peace.